Hey everyone, just making another quick video today. Almost 2 days after I posted another video, so this is like record pace for me. I'm on that more plates, more dates posting schedule. So hope everyone's doing well. And don't forget to like and subscribe. I realize I never actually say that during my intro or outro or whatever. So if you do like any of my content, feel free to like and subscribe. But let's just jump into today's video topic. So what I'm going to discuss here is effectively my career path. So I went from what most would be familiar as Big 4, so one of Deloitte, KPMG, Ernst & Young, or PwC. So I'm based in Australia, and I started out as an auditor in the financial services team in Sydney in a place called Deloitte. So everyone's familiar with Deloitte if you're in and around accounting circles, but I knew this would be a good role because it's in terms of progression in the longer term. And I think that's something that people have to view this with, is that, yes, it's not the most stimulating work, but it is a place where if you apply yourself and you do well and have a lot of application, then you can move internally to different divisions, whether it be M&A, corporate finance, what they call it here is financial advisory, or consulting, or anything that you want to do, right? So once you do get your CA, world's your oyster in terms of what you want to do with your career, and whether or not you actually make it into, an investment banking role or later on a private equity role. A lot of that just comes down to your application. And yes, I'm not going to sit here and tell you that you can get by with a pass mark or pass average and walk straight into Goldman Sachs. That's just not the case. It's a very competitive field, and that's something that people need to understand, is you're not the only one that's going to be moving into corporate finance. So you have to try and separate yourself from the herd, and everyone else who wants to do corporate finance work and investment banking and all that type of stuff. Yes, it's a competitive field, but if you do certain things like apply yourself, read up and coach yourself effectively around what an investment banking role does over the longer term. So there are heaps of great resources such as Wall Street Oasis, and DCF modeling, all that type of stuff that is relevant and pertinent to a corporate finance role is readily available online. So there's so many people come to me and they're just sitting there and they're like, oh, what do I got to do to get into corporate finance as starting out as an auditor? So the reality of the situation is you're going to have to bide your time. You can't walk from a audit role into a corporate finance M&A role internally, at least after say 6 months. I moved after 2 years, and I was pretty vocal at about the 1 year mark that I wanted to move into M&A, not necessarily M&A, lead advisory, but also there was due diligence streams, which is very commercial and very, very insightful and challenging work. It's something that people, depending on the practice you're at, it can be a very cookie cutter type approach, and you often hear people say, oh, you're just auditing in M&A, but that's definitely, at least at the practice I'm at, it's definitely not the case. There's a lot of commercial imperative, and it's not a cookie cutter environment, but there is what people call transaction services, there's lead advisory, M&A, and there's also valuations, and they're the three key, main disciplines that sit under more deal-orientated and transactional M&A work. But following on from that, you've got obviously more integration and post-actual transaction completion, 0 to 100 days, and what's the next 12 months look like. That's more of like a consulting type strategy type arm, and that's not what I do. I don't work in that sort of post-transaction. My role and my expertise and my skill set's very much in that, deal life cycle, be it sourcing, finding potential buyers, going through the due diligence process, leading a sale process, and then taking that through to completion. So that has very different streams in terms of due diligence, valuations, and the more lead advisory type of work. So all of that is something that as an auditor you can get your head around in that sort of, call it 0 to 2-3 year mark, and having a strong accounting having a strong accounting base and understanding of how debits and credits work and all that is really important, especially in a lead advisory process. And obviously more so in a due diligence process, because what due diligence does is it just gives you the angle, if you're a buy-side advisor particularly, as to what you need to look out for if you're a sell-side advisor when you're selling businesses and working in a more investment banking orientated role. And the difference is that you can come into a process half-baked and really sort of shit the bed in terms of trying to take a business to sale, and a lot of gremlins can come up during due diligence that may obviously negatively impact value in your vendor, which is obviously very, very undesirable. So in terms of, for me though, I think the key things going from audit to the lead advisory role, and I'm just rambling here, so feel free to skip ahead and around if you want, is you have to have a very strong level of attention to detail. And that's something that I've learned coming into the role, and it's not the same work structure in terms of a team structure where you've got a senior analyst above you, you've got a manager above you, you've got a director above you, you've got a senior manager above you in Deloitte or whatever it might be, you've got an experienced analyst above you, where your team has 5, 6, 7 people in it. In investment banking, it doesn't work like that. It cannot work like that, because you can't have 5 people working on a financial model. Save it for, where there's a very big transaction and someone might work on a profit and loss data pack and then a balance sheet data pack or whatever it might be. But it's something that the team structure is a lot more lean. There's a lot more pressure and responsibility that falls on any given individual. And that's not to say that, it's to feel the weight of the world on you. It's just you have to own the work. There's no level of margin for error, especially in an environment where the numbers have to be the numbers and the things have to make sense, and you can't misrepresent in a process because there's obviously legal ramifications there. So that's just something that I found, particularly challenging in probably the first 6 months, is that you have to have an incredibly high level of attention to detail, and you have to pick things up quickly, because an MD or a partner is not going to tell you something 5 or 6 times that this item should be in net debt and not working capital, or something, or some other nuance to the DD process. They're not going to keep telling you that, and it's a very, very much an environment where you need to be adaptable, you need to be flexible, you need to know that it's not like audit where you've got line of sight 3 months from now and you're going to be working 45 hours a week, perhaps brain dead. Sitting at a computer, it can be very fluid. Like one moment, 450 on a day, you've got some completion items will come in on a deal that you thought was done a month ago or fell away a month ago, and it's that type of being fluid and not getting stressed out about that type of stuff, because ultimately you're not saving lives. You're punching numbers into an Excel model or a data pack or a PowerPoint or whatever it might be, and it's not life, definitely not life or death. So I think people get stressed out a lot about it, but I think being pragmatic and taking a very sort of checklist approach in terms of these are things I can clear off. I can open the data room on this one. I can progress the working capital section of a report on this one. I think having that approach and being methodical and not being stressed out about stuff like that, or letting yourself get stressed out, is very important, because it bodes really well if you're adaptable and you can pick things up quickly and learn, and because no deal's the same. Everything has little gremlins, and where you can fall into traps is where you think a business looks like a business that you did a deal on not too long ago, and there is nuance to that. It's not a cookie cutter environment, and I think that where people struggle coming from audit is they cannot wrap their head around and adapt to a more consulting and more free thinking type of environment that isn't as process driven as you might be used to in audit. And that's fine. It's growing pains. Everyone has that level of learning and development, and if you do well in that environment, that's awesome, because corporate finance is a very you do work at times bad hours, but that's part and parcel. It's a give or take. It's a very much a balancing act in terms of what you want from your career, and whether you want to be doing more. What I guess for me, the positive is I find the work challenging, and I'm working on different industries and different businesses across a wide variety of disciplines. So be it vows, lead advisory, due diligence, acquisition or sell side or in legal documents. I find all that stuff really interesting, and for me it's really commercial, and I enjoy that type of work. And if you like that type of work and like being stimulated, and you're perhaps more aligned to that than more of a, I guess, commercial type role where you can, you're working 9 to 5, and you're never going to clock off above 45 hours a week or whatever it might be, then that's fine. It's everyone's different, has different priorities at different stages of their life. But if you enjoy that type of work, I think audit, provides a great foundation. But you have to know that once you make the step, it's a different environment in terms of the level of pressure and responsibility that you have, because honestly it's unlike, I didn't feel any of the kind of pressure that I felt in the first 6 months in corporate finance as I did in audit. So that's just a bit of background around sort of like what the things to look out for. I can do different videos on different topics around how I went about going from Big 4 to audit, from a Big 4 audit role to a more corporate finance orientated role. But if you like this kind of stuff, as I said at the start, like and subscribe, and take care of the holiday break, and hope everyone's well. See ya. Bye.